What's up, guys? What's going on? It's your boy Josh Sanchez here again with another YouTube video. And in this video, we're actually going to talk about something extremely important for you to know in order to take your trading to the next level. Yes, I am in my kitchen right now, but in this video, like I said, we're going to be going over market structure, price action, and another method that's going to help you stay calm or have better control of your emotions when you're actually trading. So with that being said, guys, let's get into it, and I'll see y'all on the other side. Let's go. All right, ladies and gentlemen, and we are live. At a lot of people's request, I decided to make a recording of this video, of this training, right? Just to make sure that everybody's getting value, everybody's learning more, getting a more inside look on how it is that I trade. And for me to really give you guys a better understanding of how I personally trade in the markets, right? I want to go over market structure with you guys. Now, I do have a couple of other videos that briefly go over market structure, right? On a surface level, I talk about market structure, price action, things like that. But in this video, we're actually going to dive a little bit deeper. We're going to be pretty much, peeling back layers and layers and layers to move forward and really understand what is price action. So let's talk about one of the main things that we pay attention to when we're trading price action. And that's what I like to call reversal zones, right? There's different zones in the market. But first and foremost, I need y'all to understand something, right? That the market moves in waves, okay? The market moves in waves. You see, every day, all day, the market is constantly moving in waves, up, down, it's ranging up and down. And our objective as traders stepping into this global market, okay, over $6 trillion a day in circulation, okay, a market that we can trade in for 24 hours a day, 5.5 days a week. We have to be able to identify reversal zones. Also, what I refer to as resistance and support levels. Okay, now, as I dive further into this, I want to make this very clear. This information can be applied not only for regular Forex trading, but in fact, this training was specifically created for binary option traders, right? And I want y'all to understand that when you really do make it easier for yourself, okay, when looking at the charts and trading, you're going to have a lot more profitable trades. You're going to have a much more prosperous journey, as opposed to a lot of people who come into the market and they rush the process rather than trusting the process. Now, rule of thumb number one, and I want y'all to remember this as we move forward. The easier it is on the eyes, the easier it is to trade. Okay, guys? I need you to write that down. I need you to remember this. It's going to be the most important thing I say out of this whole entire video. The easier it is on the eyes, the easier it is to trade. So when we're trading, okay, on the small time frames or large time frames, it doesn't matter. We're looking for reversal zones, also known as support levels and resistance levels. Now, these are levels in the market, what you guys see highlighted. These are levels where price, okay, where the market, where the currency has what we call a correction, a retracement. the market will hit a certain key level. It will react to that level. It'll continue moving in its direction, come back to that level, and react the same way it did previously. Now, is that going to happen every single time? No. But when we see that these levels are being tested time and time again, it's in our best interest to follow the market. Follow the market. So let's take a look at the left arrow, all the way to the left, where my cursor is. We see that arrow pointing down. That's on the resistance level, right? That's resistance. Look at this as the ceiling. Look at support as the floor. Right now, we're just focused on the resistance. We're just focused on this arrow, this large arrow to the top left hand, on the left-hand side. I want y'all to pay attention to the market. The market came up to that arrow, to that resistance, and then it had a retracement. Then it went back up to this new resistance where you see the next arrow, and then it went down. Now, I want y'all to pay attention to these two arrows. Okay? Now we're going to look over to the right where my cursor is. And now I want y'all to look at the price. What did the market do? How did price react when it came back to this resistance level? Look at the left. It hit that same resistance, and then the market had a rejection. And then it did it again. Look at the next arrow. Right? We're on the fourth arrow now, to the right. The market came up to that resistance, to that reversal zone, rejected, and then it came down. And then as we look all the way to the right, the market went up to this next resistance level, to this next reversal zone. It broke through the first, went to the second. Okay. And right where you see this, the last arrow to the right, look at what happened on that same level all the way to the left. Follow my cursor. Right here. Market had a rejection. And so the market had the same rejection here. Came down. Now, if we were to look at the support, what happens every time the market comes down to the arrows at the bottom? Market comes down, correction. Comes back down, correction. Comes down, correction. And it does it over and over and over again. Our job as traders is to patiently wait for the market to reach these levels of support and resistance. Here's another example. This is a different currency pair. This is on the smaller time frame, and we still see the same thing. We see the reversal zones, support, resistance. We see how the market is reacting on that level of support and how it's reacting on the level of resistance. Where you ladies and gentlemen see my arrows, where you guys see the arrows, that's where the market is having its corrections. It does not matter what's happening in the middle. It doesn't matter what's happening in here. We're paying attention to what's happening at the top, at the peak of the market, and we're paying attention to what's happening at the low of the market. Right? Very simple philosophy. Sounds a little bit cliche, but it's very much true, guys. Buy low and sell high. If you've heard of that phrase before, you could type something in the comments that you've heard it before. Now we're going to start to dive a little bit deeper, right? Now we're going to remember what I told you guys at the beginning. I said we're going to peel back layers and layers and layers And we're going to start to make it easier on the eyes so that it's ultimately easier to trade. So now we went over reversal zones. We went over reversal zones, aka support and resistance. Whichever terminology you want to use is entirely up to you, but it's the same thing. Now what we're going to focus on is we're going to start paying attention to what's happening on those reversal zones. How is the market reacting on those reversal zones? Because the question here is, why is it reacting that way? How is it reacting that way? Why should we care? Why should we pay attention to how the market reacts? So now we start to dive into the topic of price action, where what you guys see right now, right, the red circles on the screen, what you guys see is the red circles. What we start to pay attention to now is what I call reversal candlesticks. And the market's filled with them. The market's filled with hundreds and thousands of reversal candlestick patterns every single week. It's our job, our goal, to identify these reversal candlestick patterns so that we can have a better depiction, so we can have more confirmation that the market is going to have a correction. Now, I'm not going to go over every single one of these reversal candlestick patterns, but I will point this out. And I've mentioned this on a previous video of mine as well. If you haven't checked it out yet, you can check it out after this video. But reversal candles can consist of two things. The first is a candle with a small body and a large wick or a large stick coming out of it, just like the hanging man that you see on the top left-hand side of my screen. Number two, reversal candlesticks can also consist of large bodies, but smaller wicks or smaller sticks. Just like the bearish engulfing pattern, the dark cloud cover, the piercing pattern, harami, right? Now, we're going to pay attention to one of those reversal candles. And I want y'all to look at the green circle on that reversal candlestick. Remember what I said, small body, big wick, right? The market, how it reacts after that reversal candlestick is what I want you ladies and gentlemen to pay attention to. All right, guys. Now, we're going to take a look at my chart. Do you guys see a commonality with this screenshot of my trading view and this screenshot that I just got from Google? Do you see the similarities? Right? Reversal candlesticks. What did the candle after those two reversal candlesticks do? It had a strong push to the upside. Now, some of you are looking at this right now and you're wondering, well, Josh, why didn't the market have a reversal? Why didn't it? If you're saying that the market corrects itself on the candles that have small bodies and larger wicks, or vice versa, why didn't the market correct itself here on this question mark, or here on this second question mark, or even here on the third question mark? Take a look at the left. What's happening on the left? We have a reversal candle on the same support level that the market was just in. Do we see that anywhere prior? No. So the market previously came down to, it was previously at that same support level, and look at what it did afterwards. So it only makes sense to buy. Again, we're on the 3-minute time frame. It only makes sense to buy, whether it's for 3 minutes or 5 minutes. It only makes sense to buy because you are taking a trade based off of what the market previously did on that same level. Remember what I said, the market does the same thing all day, every day. You have to be patient and wait for these kinds of setups to happen. Now, I want to make sure y'all really understand this, because if you truly understand this, it's going to completely change the way you look at the markets after this video. Okay, so let's take an example of what is tradable and what is non-tradable. In the market, you will have tradable setups and you will have non-tradable setups. This is an example of a reversal zone, okay, that is tradable. You guys see at that resistance level, the market, every time it hits that resistance, the market reacts the same way. However, when we look at the support, which is the bottom highlighted zone, that reversal zone is a non-tradable zone. Why? Look at the candle to the right. That last candle had more selling power, had so much selling power that it broke below that support level. So you wouldn't buy. That is a non-tradable setup. The only tradable setup was the resistance, not the support. So let me give you guys an example, another example. And I want you guys, you can answer this in the comments if you'd like to, right? You could pause this video, answer in the comments, test your knowledge, test your teachability index. So again, the resistance is tradable here, right? You guys see the arrows on the top, that reversal zone up there, the market reacts the same way. It comes up to that resistance and then it has its correction. Now, my question to you, ladies and gentlemen, is the support level tradable as well, or is it non-tradable? Is the bottom tradable or non-tradable? There's your answer. If you guessed tradable, you're correct. Because the market reacted the same way when it hits that support time and time and time again. All right. Now, if you guys are already a part of the academy that I've learned a lot of this information from, you guys already know Evan Cabral is the man responsible for me actually knowing what I know about market structure, price action, reversal patterns. So for those of you who are already trading with the academy, make sure you check him out, as well as Millie Mills, okay, who's very, very talented with price action, market structure as well, okay, and is a bilingual trader. Now, I will cover this because I've had a couple of people in the past ask me about the colors on my candles, the colors on my charts, right? People have asked me, why are your candlesticks a different color? And the truth of the matter is, if you guys didn't know this, this is where we start to step into the realm of psychology, is that colors tend to have a different effect on our emotions, on our emotional being. So let's take a look at red, for example. Red, okay, is the color of fire and blood. So it is associated with energy, war, danger, strength, power, determination, as well as passion, desire, and love. Red is a very emotionally intense color. When was the last time that you looked at your chart and the trade is not looking so bright, but you're freaking out? You're just completely freaking out. You're checking your phone every 5 seconds. You're checking your trades every 10 seconds, every minute. It's a strong color. Now let's take a look at blue. Blue often symbolizes serenity, stability, inspiration, wisdom, or health. It can be a calming color and symbolize reliability. Now, is that to say that when your charts are a different color, is that going to completely change the game for you? Is that going to completely change your life with trading? No, but it can help you not have an emotional attachment to the money. Because when you detach yourself, when you detach your emotions from money, okay, that's a very big step forward. And for some of us, that's very hard to do. So what I'm trying to get you to understand, or what I hope you've understood from that, is that colors have an effect on our emotions. The colors that we are exposed to, especially on the charts, have an effect in our emotions, our behavior towards the markets, how we react when we have a losing trade, when we have a losing session, how we react when we have a winning trade and a winning session. Now, I'll leave you guys off with this one here, right? The goal of a successful trader, said by Mr. Alexander Elder, a Russian trader, very successful. The goal of a successful trader is to make the best trades. Money is secondary. Remember what I said, the easier it is on the eyes, the easier it is to trade. Now, if you're looking at this video and you're new to trading binary options, or maybe you have experience, if this video has helped you, let me know in the comments. If you'd like to see more videos like this, I would love to whip up this kind of content for y'all. But if you're new to trading binary options, I actually have a really solid broker, pocket option. Descriptions on the the link for that broker is on the description below. You can check that out. Practice learning market structure, apply it, apply price action, practice it, study it. If you got questions on the academy that I use to trade, it's broken down. The link for that is in the descriptions as well. If you got value on this video, just leave me a thumbs up, guys. Subscribe if you haven't already. Okay? And if it's your first time on my channel, then make sure you also take the time to check out the previous videos that I've also done. As a matter of fact, here is trade history. Okay? Here's the trade history for the recent trades I've made. 2 losses, 1, 2, 3, 4, 5, 6, 7 wins. Using the same method I just showed you guys. So go out there, break some eggs, practice, apply, and kill it. All right, so appreciate you guys. I'll see you on the next video.